We're going to get into some questions on a number of resource companies. Before that, though, David wanted to pick up on a theme having to do with retail.
Yeah, in general, I think that over the last 12 years, the period 2000 to 2012, we got used to the idea that the price setters were the ones that you wanted to own. So the commodity producers that were setting price for the world based on all of this demand that was out there. And the price takers were the ones that got hurt all the way through, those that had to pay those prices. We have moved into a world which is very different. And this is why the consumer benefits, because they are the price taker. And the reality is that in a world of muted inflation, different types of companies win. So for instance, while the agriculture companies did really well, like Monsanto and Deere and Caterpillar, today, who's doing well? It's the companies that buy the products, like the food companies have lower input costs. The processors, like Archer Daniels, for instance, is a winner. And so you just want to look at things a little bit differently today. And I think Canadians in general are used to looking at the price setters because that's a big part of our market. And it's a shift in mentality, I think, in what's working.
Okay, very good, David. Let's get back to questions here. Terry's in Sault Ste. Marie. Hi there, Terry.
Hi, Mark. Once again, great show.
Thank you.
David, I was just wondering, just in the last week or two, I had picked up some precision drilling, thinking that it did pull back and it has held its own. I'm just wondering how you feel about that, and I know like the whole sector has fallen, but maybe you can give me some more insight.
Yeah.
Thank you.
Terry, I would continue to say you probably want to stand aside on the services companies. The only exposure we have a little bit of Secure Energy Services. It's a small position. It's actually hanging in very well. But you know, Precision's pulled back from $16 to $10. Like that's a big pullback, and I don't know where support is. I'd prefer to see things change before I was prepared to put money to work. And I just think you're going to be fighting a headwind. You only have so many dollars to put to work. Put it to work in something that's got a tailwind.
Let's look at a couple of minors here. Joe in Hamilton wants a comparison. Go ahead, Joe.
Yes, Mr. Burrows. I was looking at Lundin and Hudbay. I believe in your psyche about catching a falling knife, but if they're pretty low, this might be a good time to add to them. They might be takeovers, who knows, but they look like solid companies, and I was taught buy low, sell high. So I'll just venture to what you got to say on this, and thank you very much.
Okay. So I'll say one more time. When commodities go out of favor, they can last for 10 years. So I'm not saying there won't be rallies, and I'm not saying that they couldn't be good rallies, but to get a secular tailwind is unlikely in a world where China has said we're going to take our investment in fixed investment from 50% of GDP, which is more than any country on earth has ever spent on fixed investments, infrastructure, down from there to try and focus on consumer. So these companies benefited from that ramp up in spending to 50%, which will now face that headwind. So, you know, try and pick a bottom. It's speculating. I really think it's the wrong place to look. Don't look backwards at what worked. You always have to have process to look forward. Where is the money going next? And money's not going into this space.
All right, fair enough. Next up, John in Willowdale, Ontario. Hi, John.
Yeah, hi, Mark. Great show as usual.
Thank you.
Dave, I know you're not too keen on commodities. However, you've owned this particular stock in the past, Labrador Iron Ore. I'd like to get your thoughts on it, and would you buy it at today's prices?
So thank God for stop losses. We don't own this as it stands and haven't for some time. Labrador Iron Ore has a wonderful business model. They get paid a royalty on every pound of copper produced by the Iron Ore Company of Canada. It doesn't really matter what the prices are being transacted at. It's a volume-related thing. That being said, it's in the halo of the metals sector. Iron ore prices in China are hitting new lows. Rebar prices are hitting new lows. It's a tough one for me to want to buy. You know, I just go back to the fact that when you have only so many dollars to invest, you should use those dollars to invest in things that are good getting better, because you'll get paid for the value in the business, and other investors may be willing to pay an expanded multiple of earnings as they realize things are getting better. And we're not bottom fishers, and I think that it's a risky business.
We have a lot of questions lined up. We can't get to everybody, but we'll put a bunch together here in the Market Call Minute. Brian in Lindsay, Ontario, he called in about NXP Semi. It's tied to Apple, isn't it?
Yeah, NXP Semi makes near-field communications chips, the stuff that will be used for that Apple Pay. We own the stock, and I would continue to buy it here. Semiconductors as a group acting extremely well, and this one within the group behaving better than the rest.
Mary in Montreal called in about Crescent Point.
Great company. That being said, wrong sector. I would not be a buyer. We came out of this stock a while ago.
Steve in Burns Lake, BC, on Power Financial.
Power Financial we like. It's in the right space. I think that there's better names. I'd prefer to own a Manulife than a Power Financial, but they'll benefit from strength in wealth management in the fund business. But I'd prefer Manulife, or alternatively in financials, something like a Morgan Stanley.
You say you hold Disney. What about this one? Louisa in Hamilton on Time Warner.
Time Warner. We don't own Time Warner currently. Stock's been a little bit volatile in the last little bit, but we do like the communications and media space.
Big spike on that Fox offer, and then that was rescinded. We'll wrap it up here with Hornbeck Offshore.
Yeah, this is another company just facing a headwind, and we'd prefer to stay away from the group.
You can hear the tone in your voice when you're asked about companies like that.
Well, look, you know, here's a stock's down 7% today.
Yeah.
And that doesn't happen overnight. When you get 5 and 7% drops in stocks, it's because investors are just stepping away from the group. You want stocks that don't have volatility, especially not negative volatility.
Right. Okay, well done, David. Let's take a break, and we'll come back with top picks.